Rahul, come to you. And while financial services may be just plateauing out over the next 2-3 quarters, as Vineet said last quarter, magic has happened with BPO.
That's true. We were looking at having a break-even this quarter, and we've achieved that.
Yeah. So how do things shape up from here? I mean, for the business, the next, let's not talk long term, but let's talk about the next 2 or 3 quarters. How do things shape up?
Yeah. So if you look at the current year, we are still forecasting a break-even kind of year, because we have been restructuring the BPO organization significantly.
The current calendar year.
Yeah, I'm talking about the current calendar year. So we will see a kind of EBIT neutral kind of scenario through the year. There will be blips as we go through the year as well, because some of our restructuring, etc., still continues. But having said that, on the overall basis for the full current year, we should be EBIT neutral.
The other bit, Rahul, and Vineet can come in on this as well, that when you guys started off IMS as a division, or not started off really, but let's talk about 2006, the margins there were single digit, close to 8% or whatever. For the next 3-4 years, you guys have taken it to 16%. Is the BPO business structured to do that? Maybe not now, or the next 2 or 3 quarters, once you are stable at a break-even level for the next 2-3 quarters. Is that a structured, is there a structure in place that would enable it to be actually a margin contributor to overall earnings for HCL?
On a long-term basis, we will look at BPO giving company-level margins, and if you look at the BPO profile, there is a mix of, there's a mix of businesses which we do which are at company margin. There are some which are still below company margin, but we have moved ahead from where we were negative margin to a EBIT neutral situation right now. As we look ahead, we are focusing on the more margin positive kind of businesses. So if you look at some of the deal wins that we've had, and Vineet spoke about the $2.5 billion wins last 2 quarters. About 10 to 12% of that is coming from BPO. So BPO also has seen a couple of $100 million wins. These businesses tend to be more transaction oriented, more domain oriented, more focusing on some of the core areas where the customers want us to be, and so the scale is larger as well. So these are going to be giving us good margins as we go ahead. But as I mentioned, it's a portfolio, right? So the new businesses coming in at a higher margin. We have some existing businesses which are at a lower margin. As we go ahead, we will see the rebalancing of the portfolio happen to go with high margin businesses.
Okay, Anil, a question to you really. While Vineet said that there is a lot of deals that you've won, so maybe you'll go in a bit of a slightly slower than what you've been doing for the last couple of quarters. But the question really is, as a lot of your annuity deals reach that kind of a maturity stage, deals which you won in 2009, 2010 as well, does this is this a structural lever for margins to improve over the next couple of years?
I think what's happening in our structure is the annuity deals coming, which gives us a certainty in terms of revenue flowing into the company. And since they are critical, they run the business operations, they have to stay as long as the customer is staying. So that's one side, which is a certainty. Second side is there is a upswing which happens over a period of time, but the inflow of the new deals which we are signing is also quite high.
So complaining about it, but okay.
So which will...
He's a finance guy.
Yeah. Okay.
He constantly keeps his eyes on margins.
Okay.
So which will put I would call... So there is a balance which is going on between the two. One is the existing deals which have matured over a period of time, giving higher margin, and the new deals which are coming into our portfolio, progressing in terms of margins.
But other things remaining constant, even with the pressure of the new deals, with the annuity stage coming in or maturity stage coming in, you should be able to hold out fairly well, I guess.
So, as I said, again, I will stay away from giving any margins. Yes. But the business is doing well. So you have seen it even in this quarter, which is in spite of 90 basis points headwind, we have been able to improve our margins.
What about hiring, Anil? What's the target, say for the next quarter? I'm talking about, say, maybe the next 3 quarters, because a peer of yours that came out of the numbers recently has lowered down the hiring target. They've started about how client decision spending remains extremely volatile. Does that or the scenario that you're facing, does it differ your hiring targets than what they were earlier?
So far as the targets are concerned, there is no change. We don't share the targets, but internally there is no change. We follow two-way policy. One is the campus hiring, the fresher policy, which we started hiring from last year onwards. And second is the just-in-time hiring, which is the more of the laterals we hire. So we'll continue with that policy going forward.
Okay. We discussed 2 geographies per se. What about the rest of the world? Asia Pac was maybe slightly soft last quarter. It's done fairly well, even though the size may be lower than what the US may be. How do you expect that geography to shape?
I'm concerned on the rest of the world. I'm not, that's the disappointing part of what's happening in the global economy. In 2008, we saw Asia Pacific grow at a phenomenal rate. If I exclude India, and India deals are very large, but they're very low margin, and therefore you have to do those deals only for strategic reasons of building competence or solutions. If you exclude that, Japan is struggling. We're still not out from the post-disaster economy. Australia is muted. Singapore or Malaysia or in none of the countries have kicked in a big growth number, and neither have we been able to convert China into a big market for Indian IT. So I'm a bit disappointed with the rest of the world. On an overall basis, on an LTM basis, the rest of the world has not done as well as US and Europe has done, which is very difficult to digest. And therefore, I'm a bit concerned on the rest of the world, and I hope that the economy in these countries do well and more change the business contribution comes from the rest of the world, which is going to be very critical for the global economy, which is going to be very critical for our customers, and which is going to be very critical for us.
Okay, the last month and a half, Vineet, because we are only at the start of the new quarter, but I'm just putting in the last month and a half. Client conversations that you may have had, do they suggest holding back on spending decisions, one from the rest of the world and two in Asia, for the world as a whole, and two specific to the Asia Pac region? Do client conversations suggest that they are holding back in spending, or they're extremely volatile in their decision making, and therefore decisions that were probably slated to come on time are not coming in on time? Do you see anything like that with your client conversations?
So my answer has to be carefully worded. With the view we have from our seat with our client conversation, there is not a single instance of client conversation slowing down. Their budgets were frozen somewhere in January, which is at the same level, almost at the same level, with few up and few down compared to last year. And the conversations where we are challenged are only where vendor consolidation conversations are going on and we are the incumbent vendors. But other than that, all customers are pretty made up their mind, consistent with last year, that change the business is a quarter-by-quarter spend, depending on how things are rolling out, and run the business can only go down, and therefore you have to be proactive about reducing their run the business spend so that you can invest, change the business.
We just end this with probably talking about the short term, since you guys would probably look at quarter on quarter. Just to sum it up, next quarter, and since we're talking on quarter basis, if I'm assuming it currently, that maybe the deal flow will slow down a bit compared to what you've done, but that's a conscious decision that you will take. But you'll be able to hold out fairly decent, one on the operating picture, two on the revenue run rate, and three hopefully on the bottom line as well.
I think deal flow will slow down because it's a conscious decision, and we should be good because our order book will convert into revenues.
Gentlemen, thanks so much. Pleasure having you as always. Thanks so much for taking the time out. Congratulations on the BPO break-even as predicted, and great holding up on the margins under. Thanks so much for joining me today.
Thank you so much.
That's the HCL Tech top management on their earnings. It's been a very good quarter. Hopefully some semblance of sanity in the IT space, which was probably facing some bit of a guidance gloom from one of the other peers.